growth, or how many years of growth do you think happened in 1 year or 18 months of this pandemic? Obviously, a trend toward e-signing was going to happen at some point, but it probably would have taken longer. How much of that do you think was compressed into the pandemic itself?
I think it was meaningful. If you think about the fact that over the 6 quarters, we doubled the size of the business. And even though we're a high growth business, as you know well, Emily, we probably wouldn't plan to double every 6 months. So we think we had a fairly significant increase to our growth rates. And even if you think about Q2, which we just announced, we had 50% revenue growth, 52 on the subscription side. And whereas traditionally, we've been more in the high 30s. So I think you can see there's a meaningful piece. And we now think we've come out of that sort of heavily COVID-induced growth and getting closer to what the new normal will look like.
I mean, the way I think about it, it's like, thank goodness that we're signing these things electronically and that is now so much easier. But of course, the big question is, can you keep this kind of growth up post-pandemic? How does that trend?
Well, if you take a look at what we provided for guidance, so Cynthia Gaylor, our CFO, put some pretty strong guidance for the second half, even though we'd had this very seasonally strong first half. So I think we're quite bullish on the growth opportunity ahead. And I think the core reason behind it, and the reason we have the optimism, and I think the market is seeing it, we have a very significant TAM. We're in a very strong competitive position. And to date, touch wood, we've been executing really well. Team DocuSign has really stepped up to the opportunity. And so I think the expectation is all three of those things are going to continue.
So DocuSign is, of course, known for its e-signatures, but you've expanded into other areas. Talk to us about where you're seeing the most traction.
So to be clear, e-signature is where it starts, right? E-signature is what brought us to this dance, and we wouldn't be doing over $2 billion of revenue this year if it weren't for e-signature. At the same time, our customers, and we are fundamentally a customer success company, have come to us and said, before the signature, as we generate agreements, and after the document is signed, is we have to manage those agreements and search against those agreements and run our business better from the information that we can elicit from those agreements. That's where we want you to go. And that's what the DocuSign Agreement Cloud fundamentally is. And we're building out that functionality, both the pre and the post signature, so that we can deliver a more fulsome solution and help our customers really run their businesses better.
You have over 1 million customers now, as you said. What are the needs? What are the demands that you're seeing as the pandemic drags on and we move towards some sort of new normal, which still seems so far away?
Yeah, we like the new normal too. I just wish we could get here a little faster. I think the way to think about it is during the pandemic, we had a lot of our customers that were sort of in survival mode. In fact, I just had a conversation with a smaller insurance company called Down East Insurance, and their CEO told us, she said that if it had not been for DocuSign, when they had to close their physical doors because they couldn't operate physically anymore, they probably would have to close their doors. Over half the business that they did was driven by e-signature in the year post-COVID hitting. And now they're saying, that's fantastic, but how do we take our digital transformation to the next level? We've done the basics, but let's look at the rest of our business and the rest of the opportunity. That's where we see the growth. We see big customers the same way. Commonwealth Bank of Australia, another great example, where they're a big customer of DocuSign, been successful for a while. Coming out of the pandemic, they grew their volume 175% with us. So I think that's where we are now, where people are saying, we got our toes wet. We saw the benefits that you articulated and see in terms of ease of use and the speed to getting things done faster and better. And now we want to accelerate that through the rest of our business.
You're a San Francisco-based business, Dan. I've been to your office, beautiful office space. How are you thinking about the return to work for your own employees? We've seen companies like Coinbase give up their headquarters altogether, go fully remote. Other companies are downsizing. How are you thinking about this?
So with great frustration right now because of the fact that I can't be in that office just a couple of blocks from here. I think the reality is we think that the new normal for us will be different, but it won't be dramatically different. Our philosophy is that we think part of what makes our culture great is the interaction that our employees get to have with each other. And some of that we believe needs to be in person and it's going to occur in our offices. So we're not getting rid of our footprint. We will probably grow our footprint a little more slowly than we had in the past because a lot of our workers are going to come with less frequency. So we're going to have less sort of like dedicated desks and more of people hoteling. And so it probably means we'll grow a little bit more slowly our office footprint, but basically it's the same thing. We're going to ask our employees for the most part to come back into the office because we think that's going to allow them to have better career growth, for us to have better sort of innovation in our business. and then allow us to serve our customers at the optimal. So that's how we think it's going to play out.